This is Richard Flax at MoneyFarm, talking about some of the things that have caught our attention over the past few days. Three things really to touch on. The first, UK GDP. UK GDP was released this week, and it was predictably very weak, but in line with market expectations. Nonetheless, it points to an economy that is slowly beginning to try to reopen, try to recover. And the question remains, about the trajectory of that recovery, from perhaps a lower level than we've seen in some of its European peers, and in the US. The challenge for policymakers, particularly on the fiscal side, is to what extent to continue to provide the very meaningful support to household income, particularly that they have done. And how to gradually withdraw it. Obviously, the furlough program comes to an end in October, and the question is to what extent will the government try to replace that or not? And the data we've seen this week just reminds us that it's a difficult question. It's a difficult question to answer. The second point is around corporate earnings. We've seen a raft of corporate earnings in the US and Europe over the past few weeks. And in general, the message has been a relatively positive one. Companies have generally managed both expectations and their businesses relatively effectively in the second quarter. So earnings did decline year on year, but not by as much as analysts had expected. And that, to some extent, has been reflected in the recovery that we've seen in equity markets, particularly over the last few months. Interestingly, there was a bit of a divergence between the US and Europe. Expectations for US earnings have drifted a little bit higher over the last few weeks from the low levels that we've seen, whereas in Europe we've continued to see those expectations come down a little bit. And some of that is a sector mix. Obviously, the US has a bigger technology component perhaps than Europe, which has more of an industrial and automotive exposure. So when we think about corporate earnings, we've seen some resilience in the face of obviously a very, very difficult economic environment, and some signs that companies are managing their way through it fairly well. The last point is around US inflation. US inflation was released this week and was a little bit higher than expectations. And this matters obviously because you've seen central banks be very accommodative during the crisis, as they should be. Very low interest rates, lots of quantitative easing, and expectations for inflation have been extremely muted. And if we were to see inflation rise, and we can debate why that might be, lots of reasons why it shouldn't rise, then perhaps that creates central banks a little bit more of a policy dilemma. Our expectation is that even if you did see inflation rise, it's still below the sort of 2% target that central banks usually quote. And we think, particularly in the US, that the Federal Reserve will feel comfortable letting inflation perhaps drift above the 2% level for a period of time in the interests of maintaining an accommodative monetary policy, and really allowing the economy to try to continue to heal after the significant shock that we've seen. Thank you very much for joining us, and look forward to speaking to you again soon.